Kidney Care is the second largest dialysis provider in America, and alongside DaVita, they make up what is essentially a healthcare duopoly in end-stage renal disease treatment. Fresenius NNN properties carry investment-grade credit, S&P BBB, at cap rates that are wider than most investment-grade retail NNN. Here's the full picture on Fresenius NNN investing. Fresenius NNN properties trade at 6% to 7% cap rates, wider than auto parts or pharmacy NNN despite investment-grade credit, reflecting the specialized medical nature of the asset and shorter initial lease terms. Buildings run 8,000 to 11,000 square feet on 0.75 to 1.5 acres. Entry prices range from 2.5 million to 5 million. Lease terms are 10 to 15 years initial with renewal options and 5% to 10% rent bumps every 5 years. Corporate guarantee comes from Fresenius Medical Care North America, a subsidiary of the German parent Fresenius SE, one of Europe's largest healthcare companies. S&P credit is BBB, the lowest investment grade tier. Fresenius offers something unusual in the NNN category, investment grade credit at cap rates wider than non-investment grade QSR tenants. That spread exists because the specialized nature of dialysis real estate narrows the buyer pool and the re-leasing universe. But the investment thesis is compelling. Dialysis is non-discretionary. Patients need 3 sessions per week every week for the rest of their lives. That demand is not affected by economic cycles, consumer sentiment, or changing retail patterns. Fresenius's global parent, Fresenius SE, generates $20 billion in annual revenue across multiple healthcare segments and has been operating profitably for decades. And Florida's aging demographic profile is one of the strongest long-term tailwinds for dialysis demand of any market in the country. Fresenius leases are NNN with 10 to 15-year initial terms and renewal options. Corporate guarantee from Fresenius Medical Care North America, the specialized dialysis build-out, high-capacity water supply, specialized plumbing, and reinforced electrical systems creates genuine tenant stickiness beyond what the lease language alone provides. Relocating a dialysis center requires rebuilding all of that infrastructure in a new location, which is expensive and disruptive to patient care. This operational switching cost is a meaningful tenant retention factor that goes beyond the legal commitment of the lease. 4 things to watch with Fresenius. First, BBB is the lowest investment grade tier, one notch above non-investment grade. While Fresenius SE as a global company is financially sound, the U.S. subsidiary's rating reflects healthcare industry-specific dynamics. Monitor any changes to this rating during ownership. Second, healthcare reimbursement risk is the primary business risk for both Fresenius and DaVita. The vast majority of dialysis revenue comes from Medicare. Changes to Medicare. Reimbursement rates directly affect the financial performance of every dialysis center in the country. Third, the specialized build-out means the re-leasing universe, if Fresenius ever exited, is narrow. Primarily DaVita, regional dialysis providers, or medical users with similar infrastructure requirements. Fourth, verify the specific infrastructure requirements, water supply capacity, plumbing, and electrical panel as part of your due diligence. Fresenius NNN is an interesting category for investors who want investment-grade income at above average cap rates and are comfortable with specialized medical real estate. I'm Ryan Solberg with MaxLife Commercial. If you want to evaluate Fresenius NNN properties in Florida, reach out. Visit maxlifedevelopment.com or call 321-586-2121.